Get to the markets, the start of the holiday shortened trading week. Sylvia Jablonski, Defiance ETFs co-founder and CEO. Sylvia, great to have you with us.
Good morning, Melissa. Happy 4th.
Happy 4th. We were just talking about Tesla. It's up 6% pre-market on a record delivery number for the quarter. And you're seeing a lot of flow still into some of these EV ETFs, even though we're at these lofty levels, theoretically.
Yeah, so the Tesla news on deliveries was great, obviously. 466,000, 10% up over last quarter's delivery, 83% up year over year. So what's really happening, though, is that electric vehicles are just infiltrating, I think, the broader economy. You had, 10 million units sold last year. 14% of all cars globally sold were EVs, and that number is poised to get to 25% by 2026. 35% by 2030. Tesla's clearly the leader there, but you also have a lot of other EVs picking up on this trend. So Rivian sales will probably increase. Some of them are eligible for that tax credit. They can use Tesla charging stations. You have NIO, you have XPeng, you have Li Auto in China. So I think basically the top EV names in the US and the top pure EV names in China are poised to really benefit from Tesla's success and also just the broader commercialization and acceptance of EV vehicles across drivers.
Yeah, we didn't even get to BYD, which also posted its own record delivery number for the quarter over in China, the #1 in the Chinese market. But Sylvia, you're still seeing flows here, even though Tesla's, a huge gainer in the first half of the year. I'm just trying to get a sense of how investors are thinking about the second half, given the big gains that we've already seen in the first.
Yeah, and I think it's a fair point that you're making, why not sort of take your gains? But I think that there are two areas of the market that are still continuing to grow. So if the future of technology is AI and have a lot of reasons for compelling growth in the future there, I think EVs are the future of automobiles. I think we're just in the first inning of EVs and EV adoption. You have so many tailwinds from whether it's government spending, government commitments to going carbon neutral, just general take up and ease of charging stations, being able to actually drive these things, charge them, and use them more productively. So I think that it's still new enough where it's just poised to grow. It's such a small percentage of automobiles sold are in the EV space. So yeah, I mean, we have an EV basket out there that's actually just been around for a couple of days, and we've seen just great pickup in the last couple of days because I think investors are looking at this and thinking, okay, this actually just has a lot of runway. We're in the beginning stages here.
You've also got a cruise ETF, and I bring that up because, Carnival has been a top performer in the first half of the year. It's been more than a double at this point, and is indicated a little bit higher in the pre-market. And you're seeing enthusiasm in the travel trade as well still.
Yeah, so 51 million people are set to travel this week for 4th of July. We sort of know the story here that a lot of the spending has gone from goods to services, and the travel industry is just massively benefiting from this. I think, you have airlines, Delta increasing earnings, you have hotels that are participating in the reopen of meeting, East to West, China reopen, Europe reopen, Hyatt, Marriott, and the cruises themselves, as you said, Caribbean, Royal Caribbean is picking up. They just built a ship that's 10 times the size of the Titanic. Carnival has picked up. Spending on Carnival cruises has picked up. Norwegian, that high-end luxury buyer, has consumed by buying extra tickets, spending more online. So you have so much spending going into this space. The sheer amount of travel from the true reopen trade of COVID and the true kind of global reopen trade. You have, consumers now going to Europe instead of just Miami is really benefiting those cruise ships.
Are you seeing any evidence whatsoever in terms of, the flows into your various ETFs that indicate that people are going into some of the underloved areas, maybe you have this notion on Wall Street, go into the RSP versus the S&P 500, so the equal weight, so that you get participation of the names in the sectors that haven't really performed on par with the biggest 7 tech stocks. But are you seeing that in terms of the flows into your ETFs?
Yeah, so I think we're seeing it in a different way. We actually have very much experienced a recession last year, right? Because we had a lot of tech-focused type of products. We had the AI and machine learning ETF. Nobody cared about that in 2022. In 2023, it's the hottest trade, and it's where we're seeing all of our flows. Last year or the year prior were very much kind of like retail goods spending trades. And now we've seen that shift over to travel. So the consumer is kind of back out there consuming entertainment experiences and travel. And so we're seeing flows, perhaps that was underloved last year and is a little bit of a change up there. But yeah, I mean, those are the two main areas that we're seeing flow into. And it's actually continuing to grow. It's not slowing down. We very much did not see flows in 2022 into those growth areas.
Are you going to have a Bitcoin ETF, Sylvia? Have you filed for one? Are you looking to file for one? It seems like everybody and their brothers is filing or refiling applications.
Yeah, I mean, look, we've certainly brought things into the market for consumers to look at in the space in the past, and it hasn't gotten pickup. I think it'll be really interesting to see what happens with sort of the BlackRock and Grayscale race here on the spot product. If it gets approved, I think that sort of resurrects the trade. It's back up over 30,000. It actually could have a shot of becoming commercial. It could have a shot of having practical use cases in the environment if like these two major institutions actually get it past the finish line. Otherwise, I think, you'll kind of get some range-bound trading in the products that exist. But approval of a spot product probably resurrects the hype of crypto, in my opinion.